Great. So we are live. We are recording. All right. So starting on just firstly, guys, how is my mic volume? Just hit me up in the chat there. Sweet. Oh yeah. So yeah, when we look at Bitcoin, we've obviously been pumping since December 2022, right? And as I've said many times before, if you go look at the reverse repo facility, which let me actually just add it to the chart here very quickly here. Repo. What's it called again? This is just something really worth looking at. I think it's this one. Overnight, here we go. Okay, so RRP ONT. I think this is it. This looks like the same thing. Oh yeah. So there we go. Perfect. So you'll see. So this, for those who aren't aware what the reverse repo facility is, this is when banks send their cash to the Federal Reserve overnight, and then get it back the next day at a fixed interest rate. And so when there's like massive panic in the markets, this is the safest return you can get. So when they've got, so basically you'll see that if you have to put this against inflation and the money supply and so on and so forth, which I do have, I'll actually go find the link for my Twitter thread on all of this and share it for those interested. But yeah, so basically this is the banks putting cash into the reverse repo, right? Which is obviously increasing over time. Then once we got to the bottom of the market, and if you look at this point in time on NASDAQ and indices and so on, you'll see it's the low as well. Wouldn't be surprised if it's gold as well. You can see literally the top of this market is the bottom of risk assets. And so you can see we've just been plummeting down. And so at some point, this is going to change. When economic conditions, finally crack, this will start shooting up. And this for me is probably like my number one indicator as to when the market is going to reverse on a macro scale. More so using it as a bottom indicator when this is at the top, right? So we'll see how that plays out. But my point is, this is how long smart money has been in the market, because when they start taking this out the reverse repo is when they actually start deploying this cash into the market. So smart money has been in this market for ages now. And so I'm not saying that this is a top, right? But this is just something to be very conscious of. Okay, so yeah, we look at the monthly for Bitcoin, right? The month before that, we swept that high, we dropped lower. I anticipated that I was looking for this, right? I wanted that because I said it in many streams before, but I wanted a deeper retrace because it meant there was more upside. Also, in addition to that, you'd be, moving into this order block, but that's already been traded into. So where do we stand now? Well, we've taken out this high, and right now we've swept this high, which is at the start of the month. So it's pretty simple. It's one or two things that need to happen now, right? So it's either one, you displace higher, right? You got to clear these highs. Otherwise, you're just going to get, at the least, you're going to get a retrace. Or at worst, for the bulls, you'll get a reversal back into the range, right? Because this is the range that we're dealing with. So this low to this high. This is the range you got to focus on. Don't worry about this. This is obviously the trend, but this is the immediate range to work in. Why is that? Because this is a protected low. This is something that you'll hear me talk about going forward, is protected lows, highs and lows, which is a new kind of weapon to my arsenal, right? And it's actually the reason why I use order blocks now. It's not that I don't use anything else. It's just that when encoding that custom GPT, it really forced me to simplify my model. And the thing is, you would have heard me talk about, focusing more on continuation, because reversal was the name of the game for me. And continuations are actually an easier trade, but the risk to reward was never great, right? And I often would say that I'd offset the risk. I'd offset the risk to reward, the lower risk to reward with capital. So if it's a 1 to 1 hour trade, I'll just double the risk, and then it'd be my result would be a 2 hour. So, but yeah, that's not always scalable. 1 hour trades on, that's not a problem with that if you got a high win rate, which my model typically is. But it wasn't for that reason that that I actually started, looking for other way. I was just looking to distill things, and I did a bit more research. Credit to T Trades, something that someone's been on my radar for quite some time. Also studying, also using ICT concepts and so on. And I could not recommend more if you're looking for ICT stuff or you're looking to understand my model. He does a great job at giving really simple explanations for order blocks, market phases, etc., which are all the things you'll learn from ICT, except you just removing all the rambling, and he gets straight to the point. He does really great short videos with PDFs. So go check them out. You'll understand my model a lot better if you do. So, okay, so where does this lead us to where we are now with protected highs and lows? And this is a concept I learned from him, right? So basically when you form an order block, right, which is just a single candle or a sequence of candles, which is in the opposite direction to the trend that closes above this, that low, okay, that swing low is protected. And so you can, basically that then also forms the range that you can work within. And yeah, so when it comes to continuations, this is where this is your invalidation, in other words. So yeah, I'll continue to point that out as I do my analysis and so on, to make an example of where this comes in handy. And the crazy thing is that it's not only higher probability trading continuation, it's actually also a better risk reward when you have particular highs and lows, which has been quite a breakthrough for me. So yeah, I love trading reversals, but reversals are only, low time frame reversals are only high probability, or not low probability, I should say, when you're trading higher time frame continuation. So this would be a high time frame continuation, right? When price has been trending upwards and then we retrace into fair value gap, right? This move down here, you can trade reversal. It's still higher risk, but that's the only time. When I get a high time frame continuation plus the middle time frame continuation, then I'll trade the low time frame reversal, right? And okay, but I digress. Okay, so this is the range that we're working within. This is supports, which we haven't yet visited, right? So, okay, so one or two things. So either expand above, okay, and displace higher, or if we close beneath this level, which the likelihood, at least statistically speaking, is higher, and that's because we're in the 7th of October, right? So we've just opened this month, and we've just traded higher. Okay, so at the start of the month, we've only traded higher, we've taken out its previous month high. What's the likelihood of what's going to happen next if we sweep these highs? If we close this, right? Well, the likelihood of this candle closing bullish is becoming less and less as time goes on. I'm not saying it can't expand higher. I'm just saying if you've taken out buy side liquidity, you have to be conscious. Okay, so let's keep that in mind. Then go down to from the monthly to the weekly. Okay, so there's that previous weekly. It's also the previous quarterly high. The previous monthly high. We traded lower into this fair value gap, also into this order block over here. Right, I expected this low to get taken out. I was asleep at the wheel and didn't recognize the SMT with Ethereum. Okay, just take my word for it. And yeah, but look, if you want to judge my analysis on right or wrong, this my analysis at the start of this last week, the week before, was completely wrong. And the moments it started invalidating me, which was basically trading above the midpoint of this previous weekly candle, right? The EQ of this candle. Because this thing, if you are bearish, you need to respect the 50% of the previous candle. So, and we didn't. I immediately went to go check my analysis again. I recognized that I obviously had missed the SMT, which basically means this low was swept, which is basically the previous monthly low. Now we've taken out the previous monthly high, right? So we've traded previous month low to previous month high. And what did we do? Well, we closed, that was, yeah, we went up. We went up, sure, but we hit the previous month high. This was on a Sunday and then closed the weekly candle below. So technically right now, this is in fact a sweep. Okay, so now we've not only taken out the previous month and previous quarterly high, we've also now gone and swept, well, it's not confirmed yet, but we've also gone and taken out this previous week. Okay, so there's two hits of the high we talk about. So we go down to the daily. Okay, this is when it starts getting a little concerning because there's sweep there, sweep there. Here's your sweep, sweep. Okay, there's your three jobs, sweep, sweep, sweep. Okay, so then you start looking at what sell side liquidity is available, and there's now these the S&T lows become relative equal lows. So, and look, this still is a bullish range. So any type of lower time frame, reversal, so to speak, could just be a retracement. But in terms of market phases, of which there's four, right? Expansion, consolidation, expansion, reversal, retracements. What has this market been doing? Expanding. So it's valid to expect this thing to go sideways. And when you look at the standard deviation, this is what I love about standard deviation. Look how that literally that matches up perfectly. So what you want to see if you want continuation is consolidation at the standard deviation zone. So yeah, we can expect a retrace, okay, or consolidation. Either one is permissible to allow for continuation, which is one of the two things that can happen, right? At this high, we either retrace or consolidate, then manipulate and expand, which we've got plenty of time in the month to do that, which we need to, okay? Regardless, we're most probably going to go and take out this high again. And that'll be your defining moments of whether or not this is going to continue higher or retrace deeper or even reverse. Because if you get this expansion met with expansion, that's a reversal. I mean, this is a prime example right here. Look at this. You get this expansion met with expansion. That's a reversal. Okay, so yeah, it's telling times. I mean, look, we are at all-time highs. We've swept the previous quarterly high. We've swept the previous weekly high. So since it's a previous weekly high that we've taken out, we can go straight down to the 4 hour. And this 4 hour candle in the next 3.5 hours, if it closes beneath this, and even better this, right? That'll probably be a better, because this is a swing point over here. This is not a swing point. So this would probably be, because this is just a range, right? So using that candle there, if you close beneath that, candle body close, that is a change in the state of delivery. And if we do continue lower, what do we have here? Expansion met with expansion. That's a reversal. So then you start looking at the lower targets, of which there's many. And what you want to do is respect the 50% of this range. Okay, so you don't want to see price trade lower than this point here. And this is, for the support and resistance guys, this would be your support, right? Which is an order block in any case. Plus you get so it's 50% of this range, it's an order block, it's also a fair value gap. If price had to trade in this zone, you can expect the bounce. And you'd want to see that, right? You'd want to see price slowly move down. Because if your expansion is met with expansion, that's setting up for a reversal. What you want to see is expansion and then a slow move down, which is retracement. All right, look at this. That was a reversal. Okay, it didn't obviously trade all the way lower, but nonetheless, you reverse from going up, now you're going down. You look at something like this, expanded, and then you chopped around, and you slowly, look how many candles, 1, 2, 3, 4, 5, 6. So almost took like 2 months to retrace lower, and then it pumped. Oh, this is the daily chart, sorry. Yeah, so like a week or so. And again and again and again, right? So when you pump, you just go sideways for a long period of time. Pump, sideways, long period of time. And so that's what we want to see here. You either want to see this thing chop around. If you drop low, great. The pump again, then just chop around, create a consolidation, which is what we want to see at the standard deviation zone, and you want to see us consolidating at the highs if we are going to expand higher from that point, which would be great, because if you expand, if you go sideways now, that gives alts time to pump. Okay, and the ideal situation for me at least, right? And what I love about Bitcoin is that it does this all the time, expands, goes sideways, and then you get the classic AMD model, right? Then what do we get next? We get manipulation, and then distribution. Because when this thing goes sideways, you get people getting so impatient, and then you just get liquidity building up on both sides. That's what ranges are. They're just consolidating to accumulate what? Accumulates liquidity on both sides of the range. That's when you get the manipulation and distribution. So yeah, one or two things that we want to see is either going sideways, okay, that'll set us up for manipulation, or as shallow retracements. Those are the two things that we want to see if we want to see continuation. The ideal situation for alt bags is this thing going sideways, because if you get this retracement now, just straight retracements, alts will obviously bleed, because it doesn't, people obviously get worried and scared and whatnot, right? So you want to see this going sideways, which then gives the altcoin market time to pump. And then you look at Bitcoin dominance. Which, if the market goes sideways now, then this is probably going to drop lower, which is what we want to see. This is the weekly chart for that though. So yeah, I mean, check here. So there's your expansion. What is this? A slow move, what? In the opposite direction, which is a retracement. Or you could even look at this as just the range, expansion, consolidation, you sweep the highs, continuation. Of which I believe we will get, at least from a technical perspective, because on the monthly, what do we have here, guys? Expansion met with expansion, right? Reversal. Because if you look at that on a higher time frame, should give you a wick. Okay, on that time frame, let's give it, will that work? Okay, there we go. See what I mean? On the lower time frames, when you get expansion with expansion, you're forming a wick. And if the next month had to close, we had to close with this month inside this range, that's a reversal candle, a swing point, because remember, the market can only reverse on swing points. And if it's not a swing point and there's a reversal, it's because of SMT. So yeah, if we can just hold, right, Bitcoin dominance inside here, and ideally closing this candle red, in bearish, the next candle should then distribute lower. Hasbulla reckons we can go 30%. I don't think so. I don't think we'll get those Logan. Yeah, and the thing is, the reason why I say that is because the majority of the market cap, but a big part of the market cap, and I'm just using rough, napkin math or whatever it is. A good amounts of the Bitcoin market cap is ETFs and so on, right? So I don't see those flowing into crypto. Anyway, look, at the end of the day, all we need is like a move down to 50%. So I think that's fair. And we're good to go. I don't think we see these candles anymore. I mean, fuck if we do. Amazing. Won't be bums. Okay, so let's just summarize when it comes to Bitcoin before we move into Ethereum and so on. We know on the weekly we have swept these highs. Okay, so there's your first point going. Okay, hang on. We haven't displaced above the highs, which means this may not be continuation. This may be reversal as price is exhausted. Okay, so what do we need to see at the highs to then validate a reversal? Well, for me in my model, I need the high time frame liquidity to be swept. Bam. Okay, there's one. There's your high time frame. Then two. Okay, this doesn't count for me. This is a swing point. Okay, I want to see that this is also, but this was the high that was swept for the weekly and so on. Right, that was Friday, and then Sunday. There's the Sunday's high that got swept, right? And there was the previous monthly high. Okay, I need to see price sweep that high, retrace, and then sweep this high, the second, which would be the relatively speaking low time frame, right? What that would then do, okay, when you pull back like this, which then sets up for this, and that changes with sweeps, boom, and then you get that move here. That's what changes the state of delivery. Okay, for example, Here we go. See price held trade lower, then swept this lower, and then into this weekly fair value gap and so on and so forth. When market then traded above and closed above the opposing directional candles, that is your change in the sale delivery. But it's only valid when you've taken out key levels. Okay, see how the expansion made with expansion there, right? So the same thing would have to happen here. You need to drop lower and then pump higher and then close a candle beneath that's the final candle that pumps up, you know what I mean? So that's what you'd need to see from a reversal perspective, and then you need to see, expansion. Now, we obviously don't want to see that, right? So I'm just saying that's what you need to look out for. From a bullish scenario, we want to see price going sideways, which would then, from a market maker perspective, market maker model that is, price has expanded, consolidated. You should then get a somewhat shallow retrace, which would just be the manipulation, and then expansion, which would allow the monthly candle to expand higher, which is what we need to see. Otherwise, you're at risk of the monthly. That is a chance, yeah. Because if the monthly doesn't, expand higher, then you've got these highs taken out. You're above the highs. You then swept this high once, twice, and then there's your two sweeps of the highs that I often talk about. Which is, that's how reversals happen. And again, I mean, this thing's starting to, it's either we expand high and just squeeze and you just get a massive guard candle, or I think we go into reverse and then trade back into this range. I don't know what happens after that. That's neither here nor there. Okay, so just to simplify the summary there, right now, all we need to concentrate on is what price is going to do next. It has expanded, so it's going to do one or two things if we want to stay bullish. Go sideways, right, just range, which would be great for altcoins. You should see dominance start to drop. Or you get a shallow retrace, which is kind of like constant consolidation. At least we just need time. The last thing we want to see is just price immediately pump up, take out this high, close below it, and then just start trading lower. That's reversal vibes. We want a slow move lower, which is retracements, or sideways move. And that's, for me personally, if we start just going sideways here, whatever move we get down lower, if we've got the highs intact, for me is the accumulation, manipulation, distribution model, which is possibly the easiest model to trade in these markets. And it's all this asset does. It's literally just go sideways, manipulate lower, pump, sideways, manipulate lower, pump, sideways, manipulate, go on and so forth, right? Okay, so what does this mean then for Ethereum and altcoins? Well, we're going to go on the assumption that price is going to do those one or two things, go sideways or retrace. So let's keep that in mind. Let me check on the chat here. When check season, yeah, we'll get there, bro. I'll definitely shill the shit out of that bag at some point in this video. Okay, so let's go to Ethereum because that is what I'm most bullish on. Okay, let's start on the monthly because that is the trade that I'm in right now on that chart. And where I want to start, because immediately you're going to go, well, Jaron, hang on, didn't we just sweep the highs there? And then we might go and sweep the second high and that's it and it's over. You may have an argument, except for the fact that that's not the chart that I'm using. The chart I am using is the CME futures chart, which is the guys that run the show. And what do we have? Well, if you look at it just as a simple range, you swept the range lows from 2021, 2022, whatever it is. Here's your range highs. We haven't made all-time highs on the chart that actually matters for me. Okay, so at the very least, if we've swept this high, and this is the top, then I expect this high at the least to get swept. Why? Because high time frame, low time frame, that's what I need for reversals, two sweeps of the highs or the lows, right? So, and then once you do that, that's how you form that swing points and so on and so forth. But I think we trade higher. And from the monthly perspective, all we've done, right, is traded lower. In fact, actually, let me go to the spot chart for that. So this, for me, as you guys know, I'm trading this as a monthly unicorn. What is a unicorn? Well, it's not just a breaker block and fair value gap with a sweep. What makes it a unicorn is the fact that it happens at the open. an opening price of whatever session you're trading. Okay, the session in this instance is a yearly session. And what do we do from a yearly open? We traded lower. We took out yearly lows. Okay, this was a yearly low, 2024, sorry. Also, we took out 2022 on the CME futures chart. So we've taken out all the sell-side liquidity that is available to take from a CME futures chart perspective, right? So yes, we've taken out the previous yearly high, but not on the CME futures, remember, because that's my bias. Okay, so what do we need for a breaker block? Low, high, low, low. Low, high, low, low, and then a break right there. Hence why we call it a breaker block. So I just used both the swing high and swing low, just giving the biggest coverage. And I said, once this candle closes above this range, anything below 4.1, I'll be looking for a low time frame reversal model. Then on the weekly, there is a order block. So when this drop happened, I was like, fuck, I'll tell where I want to bid, but Bitcoin wasn't. It wasn't below sub 100K. But this was a sweep of the low that gave the SMT for Bitcoin. See that there's the SMT there? This low here on September 22nd took out the first of the month. September 22nd, there it is. So yeah, so there was that SMT. So order block, fair value gap, high probability, fantastic. Because remember what I was saying earlier on, is that when you get an order block, right, that forms, and you get the price that trades above this, which creates an order block, this low is now protected. The price will not go below that. If it does, you're breaking a structure. Okay, so that is the low. And also when you go down to the 4 hour, I'm trying to think where I drew my thing from, but I think it was a swing high. There was 2 to 2.5 standard deviation, big fucking surprise. It lines up nicely with the weekly order block. And it was at this point, and I think one of the last streams I spoke about saying, I was monitoring this. This was also an SMT. So you got 2 SMTs. You had high time frame SMT and lower time frame SMT, which is super high probability. So since this is actually technically a sweep of these lows, this over here is a breaker block, or just an order block to keep it simple, and a change in the state of delivery. So now this is a protected low, and our new range that we working in. Okay, so what do you see? Market maker model, right? Bam, weekly level. There is at the very least where we're going to go to next. So any of this right now, that's just a retracement. Why? Because we have not yet taken out an opposing liquidity. What's this? Previous monthly high. Okay, we took out a previous monthly low over here. That's a previous monthly high. So the least we want to see that get taken out before we start considering any type of meaningful reversal from this point, which would just be a hard time frame retracement. Now here's the thing that I'm looking out for. Okay, so I'm in from that low over here, but what I want to see is this. Why? Because then that's an order block. This creates a projected low on the weekly, and then this should act as support. And so if we manage just to chop around here for the next few days, close the weekly here with these relative equal highs, 1, 2, 3 plus a CME high at 5,500 or whatever it is. So you've just racked up buy side liquidity while you've taken out all the sell side with these protected lows. I expect continuation from this point, and I expect this to squeeze higher. So right now, that's beautiful. And remember, the thing with market maker models is that when you've got stacked liquidity is when it's high probability. So I actually didn't get here. I got back in here. I was sleeping on the weekend, and I should have paid more attention, but I was fucking around. But I'm back in on the spot margin, that is. I also added to just my long-term spot accounts. Okay, so remember Bitcoin going sideways? Cool. ETH is just going to go sideways, or it's just going to give ETH, the market confidence that if Bitcoin is going sideways, dominance drops, Ethereum pumps. Either way, right now, is this did we take out, I don't think that was, I don't think the weekend lows have been taken out. Anyway, okay, so on a daily perspective as well, we haven't swept any highs, so there's nothing to worry about. Anything that does retrace, this should hold, although there isn't a swing point here, right? So this technically isn't valid because this needed to trade into this order block in order for that low to be valid as a protected low. So what we can do is just look at let me just remove that. Where is this? Yeah. I should probably use the yeah, okay. So there's no SMT there, right? So these lows are not safe. But nonetheless, I don't expect these, I'm not looking for those lows. I'm looking to the left of the chart. I'm looking for this to act as support. This is what we call a rejection block. And just from a market maker model perspective, when the market makers, okay, you see how this moves, this obviously moves down. These candles that trade upwards, like here, and on a lower time frame, you'd probably see, yeah, you see how the market goes up here, goes sideways, and then drops, sideways, and drops. How this actually works with the market makers, right? In terms of them managing their capital, because they are liquidity providers. What they'll do is they'll accumulate long positions here, and then the market will sell off, but they don't absorb liquidity. They don't act as the counterparty, which is why the market just drops, because they're not there to absorb liquidity to offer efficient delivery. And therefore, you get a sell side imbalance because there's more selling sells than there are buyers because market makers don't step in. Okay, they induce the sell off. Everyone shits themselves, market sells off. They're not providing counterparty. Okay, what do they do here? They accumulate longs, same story. They just say, okay, great, let it drop, bam. They accumulate here at the lows. And then what happens is you'll notice at the zones where they were accumulating, okay, it's the same on the other side, it's the same, it's the opposite, right? So while they're accumulating here, long positions, they're now distributing their long positions. So this is what we call rejection blocks. So if you look at just all these zones, it's where the market consolidates on the opposite side. See that? Hence why I was saying I expect price to actually just retest this and continue higher. So, okay, so to summarize, market makers will accumulate longs, let the market drop, accumulate longs, let the market drop. This is where they buy in discounts because they actively trade as well as act as liquidity providers. The market will pump. They allow the market to pump. They don't offer a sell side liquidity. That's what the market pumps, the buy side in balance now. But where they were accumulating is where they would distribute. And then they'll just let the market pump, distribute their longs, let the market pump, so on and so forth, okay? So I don't expect anything meaningful to happen until such time that we've taken out these highs, of which will probably expand because it's going to short squeeze. And that's how these market makers models work, right? They stack liquidity because CME highs above here. So yeah, from a 4-hour perspective, when you look at applying the model, what do we have? We've got relative equal highs. Then from the 4-hour, you go down to the 15. What time is it? Probably between 4 and 5. So you'd want to see from a 50-minute marker, 50 minutes chart perspective, if this is a 4-hour FEG, then you need a 50-minute change in the state of delivery to confirm that you are in fact trading back in the direction of the high time frame. So then it's the high time frame plus the medium time frame is in alignments. Okay, if it doesn't happen here, expect this to drop lower, maybe into 6 o'clock. That's when you trade the 6 a.m. reversal. So right now we need a swing point to form, right? This right here is your 2 a.m. Okay, we're not in the future CME chart here, so the timing is a little off. But this will close. If we're going to reverse in the session, ideally you're going to close above this liquidity and ideally above that. But yeah, this would be a sweep. So you close like that, that's a sweep. The next candle, okay, and you should see this get your change in the state of delivery. You just trade the next candle up once it opens, Remember, let the wick form, trade the body. Yeah, so we'll see what happens here. But ideally, what would be easier is if we store until 6 a.m. I'm using the futures chart again. Right, consolidate here, something like that, and then drop. And then what would happen from there? This would be where you're changing the state delivery. Remember, it's always the last up close candle before the manipulation leg. And if you pay attention, if you're paying attention, then you'd also recognize that this would become a break block. Low, high, low, low, break. Yeah, so we'll leave it there for now. Okay, so bullish. Look at these highs. Right, that is just a telltale sign. How many times do I have to say this? Inducements. That is, you're telling me that's a signature in price saying we're coming back. Don't worry. This sell-off here is just to accumulate what? Sell side or accumulate buy side liquidity. Because even selling, right? So they're absorbing the sell side liquidity by buying it up with buy side liquidity. So they're accumulating buy side, which they'll offload, right? They'll offload as people are what? Buying. So they need buy side liquidity, of which the market makers have. And this is just what? Accumulation, manipulation, then we get distribution. Also from a daily perspective of which this is, here's the open. So you're in discount. So yeah, we'll see how that plays out. If this doesn't play out and you fail here and you drop low and you just go sideways in New York, something like that, if that were to happen, it might be waiting for something. And if it did, you would just form a daily fair value gap here, of which then you'd be able to move into previous day low plus a daily fair value gap, of which you look for trading out of that zone if that were to happen, right? It's all about time. But if we close above those points, that's a reversal. The 4 a.m. candle will look like that. And then this is 1, 2, your third candle will then distribute. Again, that's credit to T-Trades, swing points, right? And all that is just the market maker model on the lower time frame. Right? There's your original consolidation. You see that sell-off, right? They're not absorbing liquidity here. They accumulate, they don't absorb, and we'll see what happens here. If this closes above, what do we have? Expansion met with expansion. That's a reversal, which is why you see a wick. Okay, so checking the chat here. We have so many shorts now piled in. Also, everyone is bearish. Big dog with just looking at the chat here. Yeah, so I was saying I thought the opposite on my end, not looking at those stats, of course. Nasdaq markets, Oz specs markets all seem to be rallying. Yeah, let's actually go into NAS. Shorting on, he's talking about crypto. Yeah, well, that's just what leads to squeezes and multi-ups, right? So, yeah, I mean, shit's bullish. And I spoke about this in one of the previous streams. I said, you know, if you if you're using standard deviation, swing high to swing low, that cause the sweep. Yeah, you that's Nasdaq to 35,000. If you're using the monthly charts, right? But what that means basically is because this is the range that we're working within. Why? Because this is a protected low. This is the range that you're working within. Will this low get taken out? Maybe. But if it's going to reverse from that level, I'll bet you, right, that, you know, Nasdaq will take out this low, these lows, since they're relative. ES will probably not, and or the Dow Jones or YM or something like that. Yeah, so that's the thing. You need swing points to reverse as well as SMT. So yeah, this could very well happen. This is the range that we're trading within for the time being. So quite frankly, I just see expansion, and now we either get sideways, then manipulate, before expanding again. Which I swear to God, if that happens, given the time, this is the monthly chart. So maybe imagine we just go sideways for like half a year. That'd be wild. But if you look at it from a weekly perspective, this is just accumulation, manipulation, distribution. Right, it's AMD. And that's what I was expecting to maybe happen here, and then manipulate into that monthly level, which we just haven't got. So maybe this just chops around and we eventually get manipulations back into this range. Why? Because this low is protected, remember, from a monthly perspective. But I mean, right now, this thing's just not stopping. And I think it probably is going to continue to pump until we get data, right? US government shut down. That means we're not getting economic data. So yeah, we'll see. But yeah, let's just keep to the technicals here. I mean, for the last 2 weeks, I've actually started the week with the weekly analysis. Okay, well, this is bearish, right? Like, for example, this was a sweep. This next candle should have traded low. It didn't. Pumped higher, right? Swept this high. Okay, well, fine. Expect the next candle to at least take out these highs. Doesn't. Bam, takes up the high. Although the week could obviously still end bearish, especially if we do get NFP later this week, which has been delayed because of the US shutdown. Probably going to get delayed again. So I think the market will just continue to move up until the data gets released. The moment data gets released is when you're probably going to get a sell-off. So yeah, again, from a daily perspective, you swept that high. I went to the day yesterday actually looking bearish until the invalidation was triggered, and then I just traded long. So there was once you close above that, it's continuation. And if you saw my AAA model channel, you would have seen the trades I took yesterday. It was an absolute banger. But again, here's the market maker model, right? Rigid consolidation, sell-off, and the telltale sign, as I always say, is one of two things, if not both, ideally both, usually both. Relative highs. Okay, none of those highs were swept, and you get inefficiency. Why does the market move? For one or two, if not both reasons. Seeking liquidity and rebalancing inefficiencies. So you got both. You also didn't sweep previous week lows and so on. And there was your new day opening gap. When London opened, again, look at this inducement, which is exactly what we're getting on Ethereum right now. Not this kind of whole thing here, just this play, right? It's where price is going sideways, comes up, makes a really super high, drops lower. You take out a 50-minute swing, probably also an hourly. And from a 1 minute perspective, there's another market maker model within a market maker model. This happens between 3 and 4. You see this shit, you trade it. Right? 3 being the open of London. Look at that. Sideways, accumulation, manipulation, one-sided move. And look, exactly what I just showed you guys, same scenario here. Relative highs. None of these were taken out. That's by design. That is engineered liquidity. Bam, you get your inversion. Right? Coupled with a change in the state of delivery. Once you get a close above that, technically this is it because that gap is what I would have used. But this is what I used yesterday to be certain. The reason why is because then, in addition to that, let me just delete this part. From now on, backtesting, what I've seen is that this is how. Because typically I'd be like, fuck, okay, I'm going to trade the inversion. Where do I put my stop? There. Look at my risk reward, 1.25. Instead, I just wait patiently. Okay, reversal's confirmed for me with a inversion. Great, fine. Now I look to get on side with the continuation of this reversal, which comes when we get the change in the state of delivery over here. Okay, plus this order block also creates a protected low. So now this is where I entered, and that's where my thing was. And now back to the highs. Well, look what I have, 3R. I've just doubled my risk reward with higher probability. And you can see more often than not, it'll trade back to that change in the state of delivery, which is an order block. And so this is the protected low, but because we've now got an order block over here, this isn't the protected low. That is the key. That is what I've learned in recent times with refining my model. Everything's the same. The terminology I use is more simplified when it comes to trading the power of 3 candles, which is just swing lows and so on. And in addition to that, when you're looking at this on a 50-minute chart, see this candle here, bam, that's the reversal, okay? And then I traded this expansion. So a candle 1, 2, 2, 3, and this I traded the fourth candle. You always want to trade, if you're trading candle 3 and 4, which is creating a swing point, right? Referring to the swing point. The swing points is always the candle 2. And the thing is, right, if you want to use the accumulation manipulation model, right, a framework, I should say, all this is just accumulation of what? You're accumulating, they're absorbing sell side liquidity. Everyone's starting off here, they're absorbing that to accumulate what? Longs. Reverse, they buy in discounts at the pico bottom, right? Sweeping liquidity. What is beneath here? Sell side liquidity. Why? Because people who went long, right, they bought, they left their stop loss over there, bam, gets taken out, they have to sell back what they bought, so that's sell side liquidity, right? Market makers who are absorbing sell side, they absorb the sell side in terms of the stops. And then what they do, reverse, and they distribute the longs, they accumulate on the way down. So accumulation, manipulation, distribution. You can see that across the high time frame candles here. Right, so this is all accumulation, manipulation, distribution. Same story with yesterday, right? So New York, the telltale sign, although, and we can go down to the 4-hour for that. Yes. So yeah, if you look at this, right, so we were expanding. Yes, we took out the previous week high with this big ass wick, but nothing changed. All we're doing is expanding. When the 10 a.m. Candle opened, it swept into this low. This fair value gap. And here's the thing, here's the telltale sign. So there's a swing point, right? Okay, but what else do you need? SMT. Now, if you look at ES, and just to make this point, to illustrate it, look at what ES did. ES came into the New week opening gap and took out London. So when you look at NASDAQ, it didn't just trade into the 4-hour fair value gap, it also traded in taking out that low, which is London, and the new week opening gap. So technically it's actually retraced its entire range. So on the lower time frame, this move here was just accumulating of what? Sell side liquidity. Sorry, they're accumulating, they're absorbing sell side, they're accumulating buy side. So you drop into the 4-hour fair value gap. There's also a second SMT over here with ES. It's a little more difficult to see. So you've got your high time frame SMT, lower time frame. You've also swept that low. Then what do we get here? Change in the state of delivery, which means this low is protected. And what do we have at the bottom here on the 50 minutes? Candle 1, 2, swing point, 3 and 4, and so on. And then you just trade to what? The relative highs, which is pre-market. This is also the 9:30 open. Also another telltale sign. If you just open and trade directly, one-sided move into a high time frame PDA, sweep the lows, bam, you're going to come take these out at the very least. Market maker model, bam. And so right now, if ES has taken this out, this for me is a valid trade, except the time's not the best. Did that take it out? Yeah, so ES has now gone and taken out Asia low. Okay, there's your SMT. There's your swing points, candle 1, 2, this is candle 3 distributing. And you can expect at the least London to get taken out. So what you can do, obviously you're not going to trade from here, right? Your risk reward shot. What you can do though is wait for the 15 minutes to close with a fair value gap. Then what you can use is this is your high time frame key level. You drop down to the 1 minute. And ideally, you wait for the 6 a.m. candle. Because now this is a C2, right? This is a reversal candle. Why? Because it actually took out this low. It's taken out that low, which is Asia. So the next candle, you can expect it to expand higher to take this out at the least. So ideally, you wait for 6 a.m. Might not to get that. Look at this on the 1 hour though. 1, 2, the next candle open, which is in the next 3 minutes, should expand higher. So yeah. But for me, that's the timing's off for me. I'm either trading the 2 a.m., the 6 a.m., or the 10 a.m. But yeah, we're just in the middle of a range here. So, and I traded this banger yesterday, this higher time frame market maker model. So there's no need for me to apply risk in these markets in the middle of a range. Okay, so enough of this. Basically, long story short, I mean, there's nothing but bullishness until proven otherwise. And that's wild. Okay, any else you guys want to look at? One of the trades I am in at the moment is Asta. Let's see how this works. What did I do? What is this for? Where is that gap? Can't be the monthly. It's a 1 hour. This was probably used over there, but anyway, accumulation, and look at these highs. See that? Again, that's by design, as engineered liquidity. Accumulation, this is just the market maker model. Can you see it? So you've just, there's the low where you change the date of delivery. For me, I anticipated the daily closing above this level here. I did that by using the 4-hour charts. You can see we closed above that. Also in the 4 hour, we get the change in the state of delivery. This is actually where you change the state. This was the reversal. This was the continuation. And then on the 4 hour, this is further continuation. It's not, so yeah, my low previously was here. My stop loss. Once we close above that, this becomes my protected low. That's how the trade currently is. And yeah, being a shitcoin, it could come take this out, so then that's the game over, but it's okay. And then yeah, 2 to 2.5 standard deviation is the zone that I'm going for. Again, market maker model, right? What else? Let's talk about checks. So yeah, the longer this thing just gets destroyed, the higher my conviction. So yeah, my average is sitting just below 0.09. And yeah, this is what you want to see from a project which has such strong fundamentals. It's fully diluted. It's got buybacks, the trading fees, the swap fees, the this, the that. All the utility creates scarcity of the token. Right, there's no inflation, remember. So all that utility of the token directly affects the scarcity, or the supply, I should say, creating a scarcity of the token, which means the number go up. And this is one of a handful of projects that actually has the license to do RWA and so on and so forth. Do your own research. On that point, they are busy, got pending stuff with the SEC, but they've got full licenses through their partners and so on and so forth. And a lot of their metrics, right, for total value locked and so on is behind closed doors with partners, which apparently I think their dashboard's coming online soon, which we'll be able to see. But anyway, just from a technical perspective, I mean, relative equal highs here. This thing's been eating shit now for ages. And this is where you want to start getting into these trades, right? This is, how am I here? Okay, let's just go over here. Yeah, it's nice and clean. So, yeah, if we can go take out these lows, I'm happy with that. Don't know why this is here. I think it's because I don't have an integer, so the alert doesn't, it's not detailed. So yeah, this is just where you accumulate, right? As one of my first mentors said, rounded bottoms pays the bills. this is where you want to get into projects with strong fundamentals. You when it comes to spot investments, if you're waiting for confirmation to confirm your, confirmation of your idea, you're already too late. The whole point of being a good investor is investing in an asset before the majority of people realize it's a good investment. Right? So, yeah, again, do your own research, but fuck, this gets better and better. And the thing I'm most bullish on, which was something new to my since I first got into this asset, is Honeybee, and they're making native swaps on Bitcoin for real world assets, which is bullish. So you can get yield on Bitcoin through blah blah Fishbase. So yeah, bullish on this. It's sub 100 million market cap, competing with like 5 other projects, which have, and I say competing with 5 other projects because they're the only ones with SEC approvals and licenses and so on and so forth. So it's not like you're trading in the AR sector or gaming or something like that, where it's just like, okay, how many other people are you competing against and how novel or unique or what's your differentiator? This is just a high conviction bets on a low cap, fundamentally strong project with fuck all competitors. And again, you look at like Ondo, for example, it's like 635 or whatever, they had a total of 7 billion market cap, something like that. This is 100 million. So for me, I'm adding risk here, and at the least, these highs are going to get taken out. And that's where I can take some off the table in terms of the added risk down here. And I think from where we are now, just to these highs is a 3.5x basically. And this is one of the few moments where I actually will do, okay, we're here now to its all-time high, what it will do, because I believe it's going to go there and higher, and that's a 10x. So yeah, we will see what happens. I've steadily been increasing my bag, and I've maxed out now. I can't go anymore. It's typically this isn't more than a few percent of my bag, and it's a lot then my portfolio, it's a lot higher than that. So, but I got so much dry powder, and then of course, talking of my bag, so Link for me, let's start on the weekly. So this again, you've traded into a fair value gap. I'm waiting for this to close above that on the weekly. In the meantime, from the 4 hour, you've got this market maker model. So yesterday I posted when we were around here, so this is about a cent. And the reason is because we had all this low resistance liquidity. Looking at this as a range, you came and swept out that range low. Bam. You then closed above this after the sweep. That should change in the state of delivery. That's when I saw that in the New York session. I said this is going to pump. And then we traded straight into this liquidity and expanded. Bam. And then also from the daily perspective, I wanted to see us close above this, which we have, because now technically this should be a protected low. And then you look in terms of low resistance liquidity, you've got these highs, and of course above that you've got previous autumn highs and so on. So a big part of me is like, oh my god, this is going to do this. And quite frankly, I hope it does, because nothing changes. All you've done is then moved into all you've done then is you would probably trade into this order block, sweeping a previous month low, previous week low into this. You'll get a bounce at that point. But what do we have here in terms of market phases? Expansion. What is this? Well, if you consider this expansion is 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. This has been 1, 2, 3, 4, 5, 6, 7, almost the equal amount of time. And it's just obviously shadow. Why? Because it hasn't really moved much relative to the range. So this is probably the range I'd use, because this is a protected low. So 1, 2, 3, 4 candles that make up this range. It's now taking 1, 2, 3, 4, 5, 6, 7, double the amount of time that it used to expand is doing to retrace, which is what you want. This is just accumulation. And soon you're going to see candles, squeeze up to the upside. Probably when Ethereum makes another higher, Link will eventually follow suit. What I don't like on the lower time frame, which I really not paying too much interest to, is of course this expansion, and now it's not exactly a slow move. So what I want to see here is the 6 a.m. candle, which is the 8 a.m. on the spot, but on CME futures, which this doesn't have. When the next one opens, you could be then forming. Okay, this is that daily order block, remember? So in a daily order block, in a 4-hour fair value gap. Also, this is a 4 order block over here. This is a protected low. You should see a reversal forming here. And then continuation. Maybe it chops around here for a few days, but yeah, you've expanded. And you reverse from the zone as you're changing the third delivery. Oh, actually, it was here. There's another one, which it bounced off there. So yeah, you've just retraced back into this range. So we'll see how that plays out. One thing that blew my mind is Solana. This thing just will not die. So I mean, look at this monthly candle here. I was like, okay, we're probably going to see lower, and it hasn't. But you need to pay attention to the 50% of this level of that wick. If you trade above that, so if this next monthly candle closes above that, you can expect this monthly high to get taken out. But look at us right now. We're consolidating at that previous that wick's equilibrium. So all I see right now is what? Well, you get a one-sided move into taking our previous lows, sell side. What's next? Buy side. This is just another market maker model. Original consolidation, one-sided move. You're probably getting bored of hearing this, and so you should. So yeah, one-sided move, you got liquidity as well as inefficiencies. And remember what I was saying, what you should get is that where you had accumulation on the one side of the curve, you'll get accumulation or distribution from the market maker's perspective. So since we're going sideways, I wouldn't even be, bummed to see these lows get swept, because this is just expansion. What's the next phase? We're currently in consolidation. So if we get manipulation after this accumulation, all you're doing is sweeping out the lows, and then you can then target the highs. Especially if we close above this point here, that's that rejection block. You can use that as your. Now, back in the day, not too long ago, I would say to you, okay, this is the, once we close above the final fair value gap, that's an inversion. That would be my continuation model, right? But now I'll be able to refine it. But that still holds, right? It's just I'm not using fair value gaps. So yeah, what we could see also is Bitcoin take out these lows, and if these make a high low, then SMT, this is a stronger asset, blah blah fish based. So just checking in the chat here, crypto, if Link does that, we'll hopefully fill some more of my orders. If it drops lower, yeah. Viv saying gotta run. Cheers, bro. Thanks for joining. Triple Ace is generating his extra liquidity. I wish, bro. Lol. Yeah, look, I mean, I'm bullish because of the chart is what it is. Could be wrong. Don't know. No model's always right. Yeah, what else should we look at, guys? If not, it's time to hit the gym. Let me go check on that NASDAQ. On NAS. Is this yes? Yeah, but I mean, this is just a big ass range right now. Also, this is a yeah, that's nice. See what I mean now? Look at that. There's your low. Let me just move this out the way. You've inverted this, so it's acting as supports. You've swept these lows. This is Asia lows. Candle 2, now the third one's expanding. This high is going to get taken out. And then, yeah, we'll see what New York has to say. Because it's coming into a 4-hour resistance, or 1 hour resistance, I should say. You would have swept in London's high. Or this is actually more Asia. London's taken out. So we shall see. And then, of course, you've got all these relative lows. But again, there's not much to trade on here. Like, I mean, intraday, sure, but yeah, I prefer to trade from lows and highs. So we shall see. Anything else, guys? So many shitcoins I learn of new ones. H Suites, okay. Hoot Suites, is that as in like the social media thing? You're just gambling on. Okay. H bar Suites. This is it. Fuck. Okay, there you go, got it. It's still. Fuck, are you sure? Is this it? Oh my god, bro. Yeah, I saw a tweet the other day. It's like, I can't remember how it went, but it was like basically like, you know, when you're like, like a tick away from your stop loss, like nobody's an atheist, you know? So you've got the Gecko, it's Hedera, which is H bar is Hedera, is it not? Let's see, let me just looking at this. Just looking at the link. Okay, yeah, I think it's the same chart, yeah. Yeah, yeah. Yeah, I mean, this is, I mean, yeah, I don't know what to tell you, bro. I mean, look, I mean, the thing is that if I had to try to pump up the hopium bags, that, I mean, at least you're going side or you're consolidating, right? Like if the market goes nuts, then sure. But this is the thing for me. Like I don't. If this was a previous cycle, I would have said 100%. Like look for things that are bottomed out, and then that's what you want to trade because everything high tides floats all boats, right? But that's no longer the case because liquidity, right, i.e. the tide, doesn't flow to. It's siloed, right? A lot of these tokens are siloed. They don't get the flow of liquidity like they used to, which is why most altcoins are just making just trending lower. MCK, cheers, brother. So yeah. Oh, look what we've got here. We've got Ethereum creating that reversal. Oof, yeah. I mean, it's not really. Okay, there you go. Now it has closed above. So what time is it? It's 11 my side, which is 5 a.m. So yeah, I'd wait for because this is the trick, right? Wait for the candle to close and then trade the next 4-hour candle, which on this is the 8 a.m. But on futures, what? Oh, there you go. Oh yeah, so there we go. Futures, sweep, cool, 15 minutes. That sweep will be confirmed on the lower time frame as, and I'd probably like to use that, would be just to be safe. And then what you do is you wait for the 6 a.m. open. And the reason for that is that, let me just put up the correct charts. You then expect that wick, 50% of that to be respected. Okay. And of course, the PDA that you can use is this. So basically what you want to see is this, the wick be formed of the next candle. And if the wick trades lower than this, you're invalidated. So you wait for it basically to, this is the reversal confirms, right? Now that it's closed above that, basically, this say it has. All you do then is just look for it to do this, right? It's come lower at the open, right? So you just go sideways at the open, drop lower, make the wick, then bam. Once you get that, what have you done? Well, you formed the wick of the other candle or the next candle, and then you get on side. And what you can do now is then use that as your predicted low, and then you trade to look at those equal highs there. Fuck, that's what you want to see, boys. So yeah, bam. Yeah, all right, boys, it's time for the mass factory to get those gains. If there's nothing else, hit me up in the chat now. Now's your chance. Otherwise, I'm fucking out of here. If that's the case, boys. John Witt, anything else? Yeah. Yeah, so if I go to that, yeah, there's my nice little unicorn there. So the weekly, okay, so the standard deviation I used on the weekly, must have deleted it, is this. That's actually, it should be this, I must have made a mistake. So it's not that, it's this. Which is actually 6, whatever. Let me just correct this now while I'm here. 6658. That's just the standard deviation, yeah. I have absolutely no idea. I mean, I can't, you actually can use standard deviation on time. I think there is a tool technique for that, but yeah, I mean, you typically what I can say is that typically what will happen is you will probably get to its target before the year end. Why do I say that? Because the yearly opened, traded lower to take out a previous low high. Jesus Christ, what am I saying? Previous yearly low, okay? And so we're trading the yearly candles, what we're doing here. So when we look at the 12-month candle, we want to basically trade until this candle closes. Because this is what we're doing, right? Let me just move the mess out the way, yeah. This is a yearly candle. There's a yearly candle low, that the previous yearly candle low that we've taken out, as well as these lows here on the CME charts. And so we expect this candle to expand. And we expect it to expand until when? Well, until the candle closes. And so, yeah, at the end of the year, you can have a look at where we are, which would make sense in terms of the quarter four, blah, 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 of which we've got, 3 months basically for that. And yeah, it'd be pretty criminal if we trade above this and close above that, below that. But at the end of the day, remember, this is what I'm. See what I mean? Yeah, look at that. Bam. We've taken up the range low there, but we happen to come to the range high. So to answer the question, in terms of time, well, your first kind of base or your first milestone or first point of like, okay, what's the story, is the close of this candle. It's not to say that next year won't expand. It should then take out the previous yearly high if it's going to then reverse or retrace lower. But that's neither here nor there, right? We'll cross that bridge when we get there. For the time being, my first target is the CME futures high, which coincides with the standard deviation, kind of. That's the yearly the CME futures high is about 5.5. So we'll see what we get. I mean, listen, if we think about it, all right, if you see Ethereum doing one of these, right, out of this zone, which I expect it to, I mean, think about the FOMO. Holy fuck. This thing will expand. People will be shorting because they're offside. It'll just fuel the pump. People will just be buying. It's just price discovery. Yeah, I'm so bullish. I mean, this is such a fucking stunner. Yeah, so hope that answers your question, bro. Cryptoholic, good stream. Thanks. Pleasure, brother. Viv saying pump, please. Patience, bro. Patience. It's coming. We're here, right? We've expanded. We've now consolidated, and now we expect continuation, especially when we close above this high, this previous candy close, I'm saying. And again, our last thing. Well, yeah, go for it, bro. No worries. Jeez, bro. I mean, going to my head. I mean, this goes back to the original analysis on Bitcoin, right? The two things that we want to see out of Bitcoin for alts to pump is either consolidation going sideways, which will allow Bitcoin dominance to drop, which means Ethereum and alts go up, or at the least this goes as a shadow retrace, which will take lots of time, which is kind of the same as accumulation, right, or consolidation, I should say. So, I mean, we've still got 3 months of this quarter, but let's just focus on where we are now, and that's at all-time highs, swept the highs. That's why I started with saying, guys, like we've swept the previous quarterly high, we've swept the weekly high, we've swept the daily high. But if this is to reverse, I expect this high to get taken out. Why? Because I wanted to use 2 sweeps of the high. What we don't want to see is just this thing to fucking drop straight. I would be worried about that. And so yeah, again, to try and answer your question, I want to see consolidation. If we get consolidation or slow retracements, that means that alts will pump in this quarter at some point. It's a fickle game, this, because in like Nasdaq, for example, all I'm doing is looking at Nasdaq, and okay, there's that high already taken on. All I'm doing in Nasdaq is looking at this is how I usually look at my charts. This is YM. Right? This is the triad, right? This is ES, Nasdaq, YM. So those are the 3 assets I've got to look at to understand, what the market's doing, because I can see like cracks in correlation, and there's all SMT all over the show, right? And remember, you need swing points and SMT for reversals. Now you're dealing with shit coins. You've got Bitcoin and then all these other shit coins and Ethereum, and it's a lot of noise, is what I'm trying to say. And so if you got a shitcoin, you're hoping and praying that Bitcoin behaves. And this is why I said, if you're holding shitcoins, you want to see this thing going sideways, because that will give confidence to the market to move out of Bitcoin into alts, which is why dominance will drop. And the point I'm trying to get at is that if we've got 3 months of this quarter, since we've just started, you want to see this thing going sideways, which will allow alts to pump. And then you just got to sit back and say, okay, great, what have we done now? Like, what's different? And when you look at Ethereum, I want to see Ethereum close above this level. You just got to take it one candle at a time, right? I want to see it close above that. What does that mean? This low is protected, and then we're probably going to take out these highs. Once we take out these highs, well, again, same as Bitcoin, I want to see, okay, do we expand above? Because if we do, that's continuation. Then you can expect something like this. If we get continuation, that's where things get easy. You're like, okay, great, we've expanded higher. There's no need to worry, okay? All you do is wait for the retracements and continuation, right? Unless, of course, you get expansion met with expansion, then that's a reversal and it's game over, basically. So yeah, all you do is just the trend is your friend until the end. Right now, we've got stacked up buy-side liquidity. Let's see what the candle does above this. Remember, Ethereum is what we need to see everything else pump. This is going to tell us, because if Ethereum is pumping, it just means that Bitcoin dominance is dropping. Bitcoin dominance dropping, that means other altcoins are also going to start performing. But that's only going to happen if Bitcoin behaves and goes sideways or slow retracements. And currently, when you get these big expansion ranges like that straight into a previous quarterly high, previous monthly high, at a 2 to 2.5 standard deviation zone, that for me, I'm like, oh fuck, okay, and what do I need to see next in order for this market to stay healthy? And that's, after expansion, you need to see a consolidation or retracements, not met with more expansion on the opposite direction, because that's a reversal. You get a reversal on the lower time frame. That means this is going to turn. This monthly candle looks like bullish. It's going to look very bearish. Then you got, that for me. I'd be like, okay, fuck. Probably going to be sweating a bit, holding Ethereum. So, but then you look at Ethereum and go, well, hang on, Ethereum. There's no reason to panic, because, well, I know that unless these highs are taken out, there's no reason to look for price to reverse. That's been my biggest lesson in the last fucking however long, because I was predominantly a reversal trader. I was always looking to trade the reversal, and often you'll you'll kind of ignore the trend, and you're just like, well, I need to catch the reversal here because I want to catch the Pico top, and then you just keep getting stopped out because, well, the trend is going to continue. So that's why you just don't anticipate reversals. Just let the trend continue until proven otherwise. And then that's when the whole saying comes in. Like, when you want to build wealth, take it slow. Like, when you want to protect wealth, act fast, or whatever it is. So yeah, Q4 should be bullish. I don't see any reason why it's not going to be, especially when you overlay my macro liquidity thesis, which is that, and again, this is what comes into the reverse repo facility, right? Where's this legacy? Yeah. This was the bottom of markets. NASDAQ, all of them. Go look at risk assets. This date right here will mark the bottom of those markets. And so this is just a reverse facility, which represents the bank's confidence in the markets. This is when they were very scared, like they're like, no, my money's safe at just getting a small yield at the Fed overnight. I don't want to play, my money's at risk in the markets. Then once they were forward looking, going, okay, great, we expect things get better. They started putting in the markets, because they're like, my money is safe enough to earn a higher return in the market, and so they dumped their extra cash into the market. So yeah, right now the market, their money's still in the market, and what conditions will they need in order for them to exit the market? Well, what do we need? If you're a smart money, you need exit liquidity, and if they're still in their positions, they need to sell it to somebody who's willing to buy. And of course, that's why the final phase of the liquidity cycle for me is euphoria, which comes from interest rates being cut. What assets outperform in low interest rate environments? Well, Ethereum always outperforms Bitcoin. Why? Because it's a risk-on assets. Yes, Bitcoin's also a risk-on, but it's also kind of risk-off. Not my words. That was BlackRock's words. And that's the reason why it always outperforms in low interest rate environments, which is what we're getting. And also, if you want to take into the macro whole story, there is that the Fed's last Fed meeting, of which there's the FOMC meetings coming out tomorrow, the meeting minutes, which will give you a little more information. And that economic data will get released, because the Fed pay their own bills. They don't get it from the government, because obviously the government get money from the Fed. In their last FOMC meeting, they were like, okay, they all reached consensus, of which there was 19 FOMC members. They all kind of agreed, okay, this is what we think the interest rate should do for the next 3 cuts, or the 3, After that point, 2026 onwards, there is not consensus. There's a lot of divergence on their thoughts. And that, the whole point of markets are looking to the Fed is for forward guidance. Saying, okay, great, this is what they're expecting is going to happen. This is how we can then calculate, what we should do with our investments. But right now, there's no clarity beyond 2026. So that's why I think Q4 is going to be, the market's going to continue until proven otherwise. From 2026, I'm not sure. For me, using Bitcoin time-based model, quarter 4, the 4-year cycle is usually the top. It always has been. I don't see why it should be any difference. Yes, there are. It's times, it's different. Sure, I get it. So things have changed. But from a market maker perspective, what have we done here? Just to clean it up. Look at this. Look at all these lows. You've got to remember, from a market maker perspective, they've just been distributing their longs. Soon they're going to have to rebalance the books. I'm not saying it's going to come take out the lows here, but it's the same story here. Look at this. Like, They accumulated, then they distributed. Now they accumulated, now they distributed. Right, distributed, accumulated, distributed, accumulated, distributed, accumulated, distributed. What do we need to see next, right? So yeah, we'll see what happens. I mean, I really want to believe that Bitcoin just goes like God candle. It just doesn't make sense to me that market makers get left behind in that. If it had to do a blow off top, it's going to probably reverse and drop lower than we would like. I'd much prefer to see it just going sideways, manipulate, because that's how you get this move continued, because they then accumulate liquidity on both sides, and then they're able to balance their books without having to get these massive kind of moves lower. But on a hard time frame, that may just happen. I don't know. So yeah, hopefully that helps. A lot of information there, but long story short, I think Q4 is going to be bullish. There's no reason to think otherwise at this point. I mean, NASDAQ just keeps going. So yeah, and again, this is what I keep my eye on, is the confidence of banks to where their money should be, right? They clearly think it's safe, it's safe enough in the markets to be earning a higher yield, as opposed to sending it to the Fed overnight for a guaranteed small return. Cool. Yeah, awesome, guys. Let me get out of here and go hit the gym and get back for the US session a little later on. I really hope that helped. If you have any insights in the shower and you want to ask a question, hit me up in the chat, tag me. I can get back to you guys there. And yeah, Nick, goddamn, bro. I did record this. It's a bit of a lengthy one. But I'll pop that up on YouTube and share the link. Sweet boy, shop for joining. It's been a while. I'm going to try to do these as much as I can. Even if it's like a short 20 minutes in the mornings, or I'll try to stick to a schedule. That's the idea. Sweet guys, we'll chat to you later. Have a good one. Cheers.